Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny, Big L, Lanny the Manny, Scotty Too Hotty, whatever wrestler you want to go with here. You got Bert the Hurt. We are about to talk to you about what's that, Lanny? Another undervalued dividend stock to buy?
Not only is it an undervalued dividend stock, but it's an undervalued dividend aristocrat that really has hit the radar. Before we get into what dividend stock it is, why it's on the radar, and is it a time to buy this dividend stock, I need the millions and millions to smash that subscribe button. Give Bert and I a thumbs up. We're on the road, not to WrestleMania, but to 10,000 subscribers because we can't wait to bring it on out for you guys. But again, as Bert said, is it time to buy the dip? Bert, give us a little bit of an intro here.
All right. So what we're talking about here is we had an undervalued dividend stock, dividend aristocrat, as Lanny was talking about, that released earnings. Yeah, you get your espresso out, everybody, because you are going to be amped up, juiced, and ready to go after we talk to you about this one. But in all seriousness, we have a dividend aristocrat that recently released earnings in which there were some pretty strong facts in this earnings release that we are very excited to talk to you about. We're very excited to break down what was in this earnings release. But guess what happened after the release, everybody? Stock price dropped. Why? I don't know, but it has us screaming, great earnings release, performance down. Let's roll up our sleeves, run through the stock screener, and see if this company is an undervalued dividend stock to buy. And as Lanny said, should we be buying this dip?
I mean, to give a frame of reference, this stock is now down pretty much 10% from just a few business days ago, from late last week, towards the tail end of June, early July. Earnings release were released on July 1st for this dividend aristocrat stock. And all the results, I love. I loved everything about this earnings release. And again, this is not a small company. We are talking about a $42 billion by market cap company, one that has been a very big player in the COVID-19, distribution component and actually sticking the needle in the arms. So, Bert, what dividend aristocrat stock is heavy, high, moving up on the list on this dividend stocks to buy radar?
You hear COVID vaccines and stocks in our channel. I know all of you. You guys are probably thinking we're talking about Pfizer, ticker symbol PFE. You think
Not
we're
today.
talking about Johnson & Johnson, ticker symbol J&J. Not so fast, my friends. Today we are here to talk to you about Walgreens, ticker symbol WBA. At what, Laney, the corner of happy and healthy, or happy and dividends, as you always like to say when we talk about them?
You know it. Happy in dividends, baby. Or as Bert likes to say, check out the refrigerator department because they may have a natty daddy with your name on it.
You have two natty daddies, and you may be able to get one and then some free Walgreens dollars for buying said natty daddy on top of it. But in all seriousness, let's go through this earnings release quickly before we start talking through the metrics, because it's insane some of the things we're going to talk about here as we go through the earnings release. Adjusted earnings per share were up 83% for the same comparable period that was reported last year. Sales were not up a small amount either, Lanny. They were up 12% over that same reporting period. Those two numbers alone are fantastic. They are growing the top line by double digits, and they are just blowing the bottom line out of the water as well. I mean, that's exactly what you want to see in a stock you're looking to buy.
I mean, Walgreens is delivering positive news, but man, their stock price is getting pile driver right now, just to the mat, but through the mat here. It's almost like Taker, throwing off mankind in the Hell in a Cell over here. It's pretty amazing. They've also administered over 25 million COVID-19 vaccines.
Mm-hmm.
I know, Bert, you and I both went to Walgreens for the shot.
Yeah, they made it. It was a very easy process. It was fast to sign up. It was efficient once you were in the door. And hey, we talked about this in our last video, and we've mentioned it a few times now. You had to wait for 15 to 20 minutes to make sure you weren't having any kind of reactions to the vaccine. It was a fantastic time to buy some items at Walgreens. I know I did. Bought some coffee. There were plenty of other items. Maybe next time for some of those other people, those natty daddies might be jumping out at you to crack one open on your way out now that you're vaccinated.
I know, Bert. You didn't think you were going to get away with this, but maybe a box of mail Depends you may have put in the cart.
Oh,
I'm
there
not
it
sure.
is. There it is. Everybody stamp it on your Diplomats video bingo card right there. Lanny cracked the depends joke.
Hey, you take it easy.
Man, we're going to get some bingos really fast here in this video.
But yeah, I mean, 25 million COVID-19 vaccines. That's a lot of foot traffic, pure and simple.
In all seriousness, that's some huge. It's great to see a company that's taking such an active role in administering and helping solve this health crisis. And it's not just in the US either. It's also they're working in UK as well and in Europe to help distribute here. So it's fantastic stuff to see.
And not only that, but management also said, hey, we're doing so well, we're raising our guidance, we're raising our outlook. We're going to be at least plus 10% growth in the sales department. So this is going to be consistent throughout the remainder of the year and heading into, 2022 as well.
Fantastic, Lanny. And one of the things I want to jump out and I saw in this earnings release too, in addition to some of the other metrics we've covered, is they gave some updates on some initiatives that the company has been doing that's really going to help them compete for a level. You may have think Walgreens is an old bureaucrat. Like just put your rewards number in there, get some rewards. They're not a big part of it. They're really working to make it
my money, and I want it now.
Yeah, exactly. But you're able to do it, and they're making it easily more accessible, encouraging more people to sign up for their membership, give Walgreens more information so they can entice you with better offers. I think I see this in the earnings release. My Walgreens membership has grown to 75 million people. Their mass personalization boosted retail sales by 100 basis points in the third quarter. They're increasing some of their products to help tie it in. So they're doing a really great job of getting your data and targeting you with offers that will get you in the door and help you buy the products that you need at reasonable prices.
Now, Bert, let's just hope with those subscription numbers that they don't want to join the streaming wars with Netflix, Disney, Apple, Warner Media, Discovery.
Yeah, all those informational health videos that they have in their pharmacy, you can access if you pay them $4.99 to subscribe.
Yeah, you can get all this for $4.99.
Yeah.
But in addition, they also had some other business transactions that happened over the quarter. They sold their Alliance Healthcare business for not a low dollar amount. They sold it for $6.5 million, to which management had stated they're using $3.3 billion to pay down their debt levels. And Bert, what did that debt level look like from August 31st, 2020 to May 31st now?
It's dropped down $4.5 billion in that time frame alone, Lanny. I can only imagine that they're going to use some of the proceeds from that Alliance transaction to continue paying off debt and improving that balance sheet and to help fund some of these transformations that will help drive sales growth. I mean, it's not a part of your core business. You might as well maximize the value while you can.
Right. And I mean, especially, with them competing right across the street on the other corner with CVS Pharmacy, ticker symbol CVS, Walgreens needs to start doing things to unlock better operating cash flow, to obviously increase performance for their shareholders.
Yeah. I just wonder, are they going to have to drop the A from their name and their ticker? Are they going to have to drop it from Walgreens Boots Alliance to just Walgreens Boots? Is there going to be a new ticker change coming in here? Who knows?
Well, maybe they'll take the rocks and say B2A. Everybody that knows that little 3 letters, let's give us this video a thumbs up. Now, Bert, we're recording this video here on July 6th. And, Walgreens is currently trading at $47.70 as of right now. Again, they're down from approximately $52.50 just a few days ago on June 30th. So again, you do the math, they're down around 10%. So given that share price in that $47 range, Bert, what are analysts looking at before we jump into the Dividend Diplomat stock screening metrics?
Darn right. The analysts are looking at a forward EPS of $4.71. So rolling now into that first metric of our stock screener. If you want a more in-depth review of our stock screener, click the link above to look at the video where we talk about how we analyze undervalued stocks. That first metric of our stock screener, the PE ratio, less than the S&P 500, you take Walgreens, their PE ratio using the price and the earnings that we discussed is 10.13. A far cry compared to the stock market, which is around 45 at the current moment.
Right. I mean, that is very, very a strong indication of undervaluation here in the market. And it's hard. Again, we said it in our last few videos, on the stocks that we bought, 3 dividend stocks for the month of July, 2021, even the aristocrat list we put together yielding over 3%. As the stock market is hovering at or above 4,300, again, all-time highs, it is hard to find an undervalued dividend stock. And Walgreens being around for so long, again, they do have the dividend aristocrat status. It's nice seeing this price to earnings ratio at just a hair over 10.
And if you really like the price to earnings ratio, I think it's time to dive into that second metric, the payout ratio, because we're all going to be pretty pumped up talking about this number. Their annual dividend is $1.87. Divide that by the $4.71 of the forward EPS, because you have a payout ratio of 39.7%, a hair under our perfect payout ratio range of 40% to 60%. Fan freaking tastic, Walgreens.
Bert's pumped up over here.
I am.
His hair standing up. He's trying to get going now.
There it is.
So, when you round it, they're at pretty much 40%. Plenty of room to grow the dividend. Definitely no worries about a dividend cut because of how much room is left. Walgreens, I'm pretty excited about what they can do actually here in 2021 and 2022. Yeah. Wow, Bert. So, Bert, what about the dividend growth rate, that third metric?
Yeah, we've already knocked out that they're an aristocrat, so we know that they have a history of increasing the dividend. That 5-year dividend growth rate is 5.40%. Above inflation, even though we've seen a slight increase to inflation, that's a very solid mark. So you take that solid dividend growth rate, the mid to high single digit over the last few years, you add that with the bonus metric, which we're going to discuss here in a moment. I think you're going to like the combo factor that you're going to see for Walgreens.
Now, during the pandemic, I do want to note that their increase was only around 2% in 2020. Obviously, their increase came, I think they did it around this time last year. And I mean, the reporting on, think about it, the month of May, April, and March, the first 3 months of the pandemic last year, then, led into their announcement of their increase this time last year. So the reason why I'm saying that is I think the dividend growth this year should be much better. And I think it's going to come here. It should be coming this week. And if you're watching this video, again, we're recording on July 6th. So if that increase is coming or has come by the time this video goes out, let's see what we did.
Strong sales, strong earnings growth, strong cash flow growth. They're selling off a business that's going to have billion-dollar waterfall coming out. Signs are pointing to potentially a stronger dividend increase than what's expected.
Bert, it could be like Niagara Falls.
I guess it could, but we'll see if the water keeps flowing here for shareholders. That is for certain.
But I do want to highlight that Walgreens also has a 45 consecutive year dividend growth streak. Now, if everybody's new to this video, why is that important? Why is the consistency important here?
I don't know.
First, it made the aristocrat status by being 25 plus years of growing your income. And then now they're actually only a few short years away from what status, Bert?
Dividend king, which is 50 plus consecutive years. And if you want to take a step back and think about it, they've increased that dividend during the pandemic. They've increased that dividend during the financial crisis, the tech bubble, S&L crisis in the 80s, and plenty of other.
Bert's 21st birthday, they made it through.
Yeah, somehow they did because they had a shortage of natty daddies because we went to town on my 21st birthday.
Or the Four Locos.
Yeah. Oh, no, those were banned by the time I was 21. Those hit peak when I was 18, 19, and then they had a quick fall from grace once people started seeing what could happen. But Natty was always there for you, whether you're 21, whether it's me turning 32. I can always rely on you, Natty. No, we did not get a paid sponsorship from them for this plug.
So 45 years. So that's huge because you want your income to keep growing after you buy the shares. You want the current income stream and you want the future growth of that income stream. So Bert, what about this bonus metric here?
Dividend yield. Let's rip through this one. Their dividend, 187. You divide that by the stock price of 47.70. That gives you a dividend yield of 3.92%. So almost 4%. So think about that. A 4% yield plus a 5.4% growth rate, over 9% dividend factor. Amazing. I have nothing more to say. Just amazing. That's what you want to see. They check a lot of boxes from a dividend investor standpoint.
What you hope is not happening, and I'm not going to throw any red alarms here, is because obviously IBM or International Business Machines have a lot going on, but we all know that their yield started to swell up and that growth has started to come down. And I'm just curious if Walgreens is going through that.
This will be a very telling dividend increase. I think we're going to learn a lot about the company, what their future are, because your point is valid. If dividend growth has been slowing, but their yield is still high, we want to make sure you're still getting a strong yield and a strong, solid dividend growth rate. 5% average can be sliced and diced many different ways. You can have high increases in the first 2 years, low increases in the next 3. You can flip that trend around. We want to just see consistently strong dividend increases with dividend yield. That's the ticket right there.
That's the ticket. Now, Bert, let me ask you a question. Do you have any inkling if this could be a value trap at all for all the investors out there?
I mean, the metrics are strong. What I'm looking for is how is the underlying business performing? To me, it would scream value trap if price is going down, but you looked and you peeled back the earnings release and you see revenue decreasing, you see earnings decreasing, you see a lot of negative trends in the earnings release. Why I'm feeling more optimistic and why this may not be a value trap is because you're seeing great business results. They are doing things. They're increasing their customer base. They're increasing their memberships. They're increasing sales, a lot of positive things, and they're pushing things to move forward. And you're seeing the results from that you may not see in some of those other value traps.
No, I would have to agree. All positive signs. And they're not even just from a performance standpoint, but they're cleaning up their balance sheet. They're making it a goal to destroy that long-term debt.
Mm-hmm. Yeah. I mean, that's what you want to see. Strong balance sheets can help just keep growing, keep fueling that engine going forward. So, Lanny, are you buying the dip? That's the question. That's what everybody wants to see here.
Great question, Bert. Well, if you haven't caught the video that we released on Sunday, you already know I bought a share or so for my wife's dividend stock portfolio. So am I buying the dip? You better believe I'm interested in getting in on this dip. What about you, Bert?
Yeah, I will be buying some of this too. I mean, I just like the metrics. We go through it. We like to put our money where our mouths are. This is a stock I want to buy a little bit more of. It might not be 100 shares. It might just be 1, 2, 3, 4, 5. I don't know. I'll figure that out as we go through. But I'm excited to continue building our position in Walgreens.
1, 2, 3, 10, 20, green jacket, gold jacket.
But also, everyone, now we're curious, what are you going to do about Walgreens? What do you think about the company? What do you think about their metrics? Are you going to be buying Walgreens on the dip? Do you like their earnings release? How positive are some of these results? Are you ingesting them the same way we are? And do you think they're a value trap? We'd love to hear your comments below.
And, we'll throw up a summary screen here. But, again, Walgreens trading at $47.70 with a 10.13 price to earnings ratio, just about a 40% dividend payout ratio, dividend growth rate above 5% and increasing it for 45 plus years with a healthy dividend yield of 3.92%, which is over 2 times the S&P 500, baby.
Yep. And if anyone, please, if you haven't already, subscribe to the channel, help us get to 10K, give us that thumbs up. We're pumped to hear your take on Walgreens. Anything else you want to add, Lanny?
Who's buying the dip, baby? Let's hear it. I love it. Again, we appreciate you guys for stopping by. Again, that was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.